Welcome everyone to the Vested Interest channel. This is Shane back for a Stock Pick of the Day video. Today we're going to take a look at one out of the communications sector, Omnicom Group. We actually looked at this one, I think, back in January or February, but let's take a look again. Now this is the vested interest stock screener. This is the criteria we will be going through in this video. It must meet 5 of 8 to make it onto my watch list. Now, just because it does make it, or if it does make it onto my watch list, that does not necessarily mean I am interested in buying. It just means out of the thousands of companies out there, I am interested in doing more of a deep dive into the financials, looking at their balance sheet, their income statement, doing a discounted cash flow analysis on the company, figuring out a range of prices I'm willing to pay, and then possibly, if and when I'm looking to add a new position and it's in the right buy range, maybe adding it then. But don't blindly follow me or anyone else on YouTube. You should be doing your own research based on your investing criteria. Now back to Omnicom, you can check them out on their homepage, www.omnicomgroup.com. That's www.omnicomgroup.com. Again, www.omnicomgroup.com. Omnicom is an interconnected global network of leading marketing communications companies. Our portfolio provides the best talent, creativity, technology, and innovation to some of the world's most iconic and successful brands. We offer a diverse, comprehensive range of marketing solutions spanning brand advertising, customer relationship management, media planning and buying services, public relations, and numerous specialty communication services to drive bottom line results for our clients. Our portfolio includes 3 global advertising agency networks, BBDO, DDB, and TBWA, as well as a global media network, Omnicom Media Group, which is comprised of 3 of the world's premier providers of media services, OMD, PhD, and Hearts and Science. You can read the rest of this. Really, they're a advertising company, right? And they will help with, as they mentioned here, public relations. So something like the individual that was unalived there for United Health Group, maybe they would look to this type of company to kind of rehabilitate their brand image. You know, that's not something you want people to be thinking about whenever you're thinking about healthcare. So they might look to this not only for their advertising, but hey, we're having some issues with our brand or public relations out there. How can you help us? That's the type of stuff that Omnicom Group does. Now, the reason we're taking a look at them, down 5% on the day. We are talking about Omnicom Group, ticker OMC, again out of the communications sector, closed up the day at $77.45. 52-week range as low as $68.37, as high as $107. They are within 15% of a 52-week low currently, under $78, which is where they're at. So that puts them within 15% of a 52-week low. Market cap of $15.004 billion, a beta of 0.99, so just slightly less volatile than the overall market. Price earnings PE ratio at $10.48 per share. EPS earnings per share at $7.39 per share. Their earnings date coming up here in October on the 14th. Forward dividend is $2.80. They are quarterly payers to divide by 4, though we will see that breakdown here later. Current dividend yield, nice starting dividend yield currently at 3.63%. Ex-dividend date, September 2nd. So we are past that. Looks like they're going to pay out that dividend on the 10th. If you were to buy them now, you would not be in line for this dividend on the 10th. You're going to have to wait a few months to get the next one. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information, not affiliated with Yahoo Finance, just one of the sources I go to, $99.67. So they don't see it quite getting back to its 52-week high over the next calendar year. Now, over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 3.55%. Compare it to the current 3.63%, and since it is higher than their 5-year average, that actually speaks to potential undervaluation on this one. Payout ratio is well under the 75% or lower that I'm looking for at 40.06%. Now, free cash flow, I like growing free cash flow because companies can do some things with that free cash flow. They can keep it on their balance sheet as cash or cash equivalents, pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, and raise that dividend over time. And we want a company to be able to do all of those things with their free cash flow. So we want plenty of growing free cash flow. Looking at this one, going back to December 2021, $1.2 billion. 2022, $848 million, so down a little bit in 2022. 2023, $1.3 billion, back up. 2024, $1.5, growing, trailing 12 months, $1.7. But keep in mind, since we are only in October, we still have 1 quarter left of 2024 numbers that are still hitting the trailing 12 months. once we get through 2025, we'll be able to verify it is indeed growing over the last 4 years. But that one down year in 2022 there looks like a little bit of a downturn. Repurchase of capital shares, they are pulling shares out of the market, 527 million, a little over that in 2021. 2022, 611 million. Even though they went up, their free cash flow went down, so I don't think that accounts for the decrease from the 1.27 billion in free cash flow. So I'm going to give them a downturn on that year right there. 2023 down to 570 million. 2024 570 million in shares pulled out of the market. 2024 370 million. Trailing 12 months 343 million. But again, we don't know how much of this is still 2024 numbers. All right, jumping over to stockanalysis.com, another source for information that I go to. I do recommend more than one source, 2 if not 3, so you can make sure the information you are looking at is accurate and up to date. It's a way to back check information. Always look at 2, in my opinion, if not 3. 7 analysts have taken a look at this. They call it a consensus buy, low estimate of $80. Currently, it would need to that's a little higher than where they currently sit. So if it came back up to $80, that would represent a 3.24% increase from where it currently sits. Average estimate of $96.29 would represent a potential 24.26% increase from where it currently sits. And if it happened to hit their high of $120 there, that would be a 54.86% increase, and you could collect that 3.6% dividend yield along the way. Now, I like to look at some statistics. I like to look at return on capital employed and earnings per share growth. For return on capital employed as a part of the initial screener, I like above 10%. They're at 18.68%, so over the 10% I'm looking for there. EPS growth, I like above 5%. They're at 7.04, so over the 5% I'm looking for there. And revenue growth is forecasted at 2.39%. That's really part of more of a deep dive, but I like to throw it in here anyway. All right, quarterly payers we mentioned. Payout ratio 40.02%, very close to what we saw with Yahoo Finance. Buyback yield is positive at 1%. You want to see buyback yield positive. That means they're pulling more shares out of the market than they're issuing. Shareholder yield positive 4.59%. It does not look like they are growing the dividend, though. Going all the way back to April 6, 2023, and I actually went back a little bit further than that. They have been paying 70 cents, and that's where it still is at. All right, let's run through this screener here. Again, Omnicom is a media advertising company, but again, they do some things with your personal image or your company image as well. So it's really around advertising, but they do a couple of little things different than just a regular advertising company. Growing free cash flow, no. They're one down year. Growing dividend, no. Paused, at least for the last several years. So I don't like that, especially with only around a 40% payout. They have plenty of room to raise that dividend. They have a nice dividend payout at 3.6, but I'd like to see even single digits, 5-6% raise a year would be nice. Dividend payout ratio of 75% or less, yes, check there. They were, again, under 50%, around 40% range. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, under $78, puts them in that range. Return on capital employed is over 10%. It was around 18%. Earnings per share growth was around 7%, so that beats the 5% I'm looking for there. We're looking at 1, 2, 3, 4, 5, 6 out of 8. I don't know if this one was on my watch list still or if I removed it. A lot of times I'll throw it on my watch list and I'll do a deep dive into the financials. And if it doesn't make it, through that round, then I'll pull it off. But I'm going to throw it back on there and run through the financials of the company again. Let me know what you think of Omnicom. Is it on your watch list? Is it one you're buying? Maybe you're part of the reason it was down today and you were selling. Or is it a hold for you or just a company that you're not interested altogether? Would love to hear from you down in the comment section below. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Omnicom you'd like me to cover in the Stock Pick of the Day series, drop it down below. I'll work it into the rotation on the day it pulls back. Share the videos with anyone you think they might find value in the content. And thank you for watching to the end. Watch time is one of the metrics that the YouTube algorithm looks at, so I really do appreciate it. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope to see you in the next one, and we'll see you later. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion, investment, educational, and entertainment purposes. If that's involves risk, again, there's money to never invest any amount. You're not comfortable losing. Always use your own research, invest based on your situation, circumstances, and select criteria, or the advice counsel a certified financial advisor.